Right, fear, greed, and opportunity. So I apologize, guys. I've decided to go ahead and cut out on part of the webcam footage. Most of it, unfortunately, is just me reading it anyways. But anyways, it's cutting, whenever I looked into it a little bit deeper, it's cutting into some of the text, some of the pictures, and the things that are really important that I get across. So I'll pop in with some more videos throughout this course and through the, definitely more so within the next two, but the next two parts. But anyways, it's kind of like hindering what I'm trying to do here. So that's the reason for the change. So, all right, let's move forward. All right, emotions can create or destroy. When money is on the line, people can do really stupid things. Greed and fear are two of the most common and powerful emotions in the market. If you need proof, just spend an hour at a casino, at a game where decent amounts of money are involved. The guy at the poker table taking everyone's money is cool, calm, and collected. Why? Because he has an edge and he knows it. The odds are in his favor to win more than he might lose, and this is our goal. When you have no understanding or education in the stock market, but decide to put money at risk anyways, you are no different than the sucker at the poker table handing your money over to the guy who already has all the chips. But hey, at least at the casino you get free drinks. Mother Market can be hard and ruthless teacher, believe me, I know. But as I mentioned, these emotions create opportunity for us to make money from. So let's look at a couple examples. All right, here are two charts that are near and dear to my heart, silver and Bitcoin. Here you can easily see where people hoping to make easy money and where FOMO, fear of missing out, causes price to rise to extremes and then fall the same way. People are still buying at the very top and selling at the very bottom. If you don't know who the sucker is, odds are that you are the sucker. So I know that you've probably, if you've been in the markets for a little bit, you've seen charts like this before, right? And irrational exuberance, I think, is a good word to describe it, but it's to the point of essentially where things get out of control, right? And emotion takes over, and usually greed starting, and then fear ends it, right? So fear takes it to crazy highs, and then once the buying pressure is over and selling takes over, then it crashes back down to earth and back in search of some sort of value wherever that is. You know, when things get really out of control in the markets, then it's really hard to tell where that's at. And so that's what we're going to go through. We're going to learn how to A, not get caught up in it, and B, make good decisions based on what we see and what we know is happening and use it to our advantage. All right, fear and greed. If you think about it, fear and greed are both generally rooted in the subconscious. Often, before you can become afraid of something, someone or something created those thoughts in your mind. Take my wife, for instance, deathly afraid of snakes, yet she has had no real encounter with a snake that would warrant that level of fear. That specific fear can be traced back to her father, which was more than likely not based on any real experience as well, based on the way she speaks about them, like they could eat you. And down here in Florida, the anacondas down in the Everglades could potentially eat you, but that's not the point. Most importantly, she doesn't realize why she is so afraid, just that she is. If she took the time to think through why her fear is so strong, then I'm willing to bet that the fear would transform into a healthy respect over time. But make no mistake, this will not happen automatically. It must first be recognized and then intentionally worked on. The same exact process is needed in our trading. When I think of greed, selfish is a word that comes to mind. This begins in most of us at a very young age with the word mine. And if we aren't taught by our parents some healthy boundaries there, then there is a very real chance that those words may end up defining our personality. We all have known that person. Or I guess nowadays, people. They're all over the place. What I'm getting at is that it is a very real subconscious battle that most of us have experienced at some level throughout our lives. When you attach strong emotions to those two words, they can have a strong, unproductive hold on your life. Fear and greed. And those emotions can make a vicious comeback when you start putting money at risk of loss or gain. So it's important to understand that this is natural and to be expected, but also that it may manifest in different ways down the road. This is part of why having a plan and strategy is so important. They keep us focused on results and keep emotions in check. Journaling allows you to track your emotions and behavior over time, and we will go over this process more later on. Fear and greed can cause you to do very stupid things at often the worst time, and this is very easy to test. So take some money set aside that you can't afford to lose, such as like your rent money, mortgage money, whatever. Head to the local casino and start making bets with it. See if you don't live and die as you win and lose money. Those emotions are very real and must be respected, but must be understood. So do we need to be afraid? Your ability to execute your trades is a function of the amount of fear you generate or the lack of it. Fear is always the result of your beliefs about the threatening nature of the environment. What could be threatening about the market? Nothing. If you had the confidence and completely trusted yourself to act appropriately under any given set of market conditions. Essentially, what you fear is not the markets, but rather your inability to do what you need to do, when you need to do it, without hesitation. So, it's very easy to break that down, right? We kind of talked that a little bit earlier with the first quote. Fear is often a result of us not understanding what is happening, not reading things correctly, not being able to anticipate, not having a certain level of knowledge that we need to have. In the beginning, that's a very, very real possibility, right? For most of us, all of us starting out. You know, you're picking up tips and stuff along the way, and that's honestly just not enough, right? You need very real education, whether that's through a mentor, somebody that's been doing it for a long time, sitting you down and talking you through it, and then also being open to it. You know, whenever I talk to some people, they seem kind of open to it, right? But you can tell when people check out. And it's like, listen, you know, I've already done this. I've already been down the road. I've probably already tackled the same problems that you're going through or you're going to go through, especially if you've been doing it for as long as I have. You've seen literally everything. I mean, I have 15, 150-page trading journals, completely packed full of notes from screwing up and doing the wrong thing in almost every single. I know that market, situations are all unique, but I mean, if there's something that happens in the market, I've seen it, right? In one shape or form, whatever, and I've probably seen it 10 different times. So when we're talking about, especially when we're talking about basic things, right? You have to keep your mind open. As soon as you shut down, as soon as you decide, I think I'm going to try that, or, there's nothing wrong with that. There's nothing wrong with wanting and needing to go down rabbit trails and to explore opportunities in different things that, your mind kind of conjures up and you think of. Like, that is how experiments and coming up with new ideas happens. But they should be quick, right? Like, we should be able to find a way to test things, and we'll go over that, further on down to these courses. But the faster that you can run through those scenarios, especially if you're taking this course right now, then I'm going to lay all this stuff out for you. So, and honestly, we're going to cover absolutely everything. So when you see something that's counter, that goes against whatever I say, which I don't, I'm not the most, experienced guy out there. I'm not the best or the most profitable trader in the world, but I have a lot of experience and I've been through this before. So if you see something that is interesting, that it goes directly against whatever I'm saying, then check it out. Like I said, follow that rabbit trail, but mitigate it. Whenever I was starting out and I would go a rabbit trail, testing an indicator or whatever, I mean, I could spend 3 months on that trying to prove its worth, when it's like, essentially, if I'd have known in the beginning of exactly what indicators offer, what they represent, and their limitations, that should have been like a 2-week thing, maybe a week, and then it's time to move on. And that's what we're trying to do here, is we're trying to save time and not waste time. So, but anyways, let's move on. So the elimination of fear of the unknown can only come from the development of skill through experience. Think about someone who has never picked up a gun before and knows nothing about how it operates. Fear, or at least a healthy fear, is to be expected. As we know instinctively, without proper training, we can cause great harm to ourselves or someone else. Now think about trained military personnel. Fear has turned to respect and ultimately confidence, as he is well trained and can use his tool to execute his mission successfully. Proper education, then skill development through experience is the way. All right, opportunity. Like I mentioned, those same two emotions that cause destruction for many are the same drivers of opportunity in financial markets. As we explore concepts of cycles and value in the following courses, we will plainly see how these two emotions drive the markets to extremes that create opportunities in financial markets. This is a brief explanation as to the inefficiencies in markets that allow us to extract profit that otherwise would not be available to us in a 100% efficient market. So in summary, we want to profit from the fear and greed caused by others while working to eliminate those same two emotions from our trading. And just real quick on efficient markets. So, you've got a lot of academics, which are people, who have gone through 20 years of education, I'm being a little facetious there, but, 7-10 years, they have their PhDs, doctorates in several different financial theories and whatever else. Guys who's never actually attempted to trade in their life and don't understand just common market economics that try to say that a market is 100% efficient, which essentially means that there's no more opportunity than essentially is what a buy and hold opportunity provides. That a stock price or a financial asset price is 100% accurate in its representation, but we already know that, right? We know that there's a huge list of successful market operators and traders that have made billions of dollars and have beat the markets year over year for a long time. And so knowing that, and then also, as you'll see going forward, I'm really going to lay that out, the inefficiencies, because the inefficiencies are where we can extract profit and where we make money from. That when you involve people, humans, and you involve fear and greed and money's on the line, then there's all bets are off. If anything, the concept of herd mentality really takes over the conversation there. So the 100% efficient, the market efficiency and all that stuff is really, most of the time markets are efficient, right? That is why we can operate in them, and that's why they are, they're the playground for the rich, because over time, those market efficiency, the market is efficient over time, but in the short term, and not even necessarily in the short term, right? Like we've seen things whenever, like Bitcoin, the cryptocurrencies right now, they rapid price revaluation, right? When something goes from $10,000 to $60,000, there's a heck of a lot of opportunity there. So anyways, all that to say that the market has its inefficiencies. It is also efficient, and we're going to learn how to use those inefficiencies to make us money.